In this video, we're going to talk about my favorite covered call strategy, using a covered call right with a dividend capture. I love to double dip the profits, and I know you're going to like this one. Hey, welcome back, everyone. It is time for another red hot covered call video. Hey, look, 2020 has hit the deck plates running. Man, we are already knocking down profits from trades in 2019 that came to expiration this month. I'll tell you what, makes me feel good that I'm already in the chips. Man, absolutely love this stock market. Whether we go up, down, sideways, man, I love selling premium. That's what we do here. We sell premium. We write covered calls. We sell cash secured puts. And what I love to do is show you my trades, share with you my ideas, so maybe you get comfortable with it. Maybe you'll go out and bang the YouTube videos, read the blog articles, get comfortable with it, then open up your very own small ball account and do your very first trade. I love hearing the stories where people have done just that. They've written their first covered call and they're having success. That's what I love doing here, sharing with you my story, experiences, ideas. And if one of you gets off the bench, enters the game, takes your financial future in your own hands and has success, man, that's success for me. Okay, let's go ahead and get to this. We're going to talk about my favorite covered call strategy in this video. Buying a great S&P type company that has a fat dividend. We love to write that covered call and then we look to collect the dividend because we're owning the shares. And I love to do this in a 30-day period where we can make almost 3% on the covered call. And if that dividend is fat, we're going to collect another 2 to 3% on the dividend capture. And I call that doubling my dividends. Love the cash printing machine that is my covered call right with dividend capture. I do it all the time, and it is my favorite covered call strategy because I feel like I'm getting double the profits. Now, today we're going to talk about the covered call advisor. I've mentioned a covered call advisor in videos years ago. I love going to his blog site because he breaks down every single trade. And as far as I know, he doesn't sell anything. He doesn't have a service. He just posts up all of his trades and he breaks them down and really shows you the numbers, man. I love when the covered call advisor posts up a new trade. I can go in there and look at his trades and learn from them and see if I would have done that. Do you remember a couple years ago, he did a Bristol Myers trade? And I loved Bristol Myers. I owned Bristol Myers. He did an in-the-money Bristol Myers trade. I then mimicked his trade, but I did an out-of-the-money. The idea was who was going to profit more in the end. Well, he ended up profiting more in the end because my trade went south, had to buy the option back, meant I didn't make anything near what I thought I would make. Now look, if you like what you're hearing today, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, like I mentioned, we're going to talk about the covered call advisor. He doesn't know me. He doesn't pay me. I use the covered call advisor's blog site just to up my game. He always posts up great trades. He always breaks it down. I love reading it. In fact, Jerry always goes to the covered call advisor. He loves it. And for me, it's absolutely exciting the way he details every single trade. He has various criteria for all the various trades that he does. If he does just a covered call right, he has his own spreadsheet. If he does a covered call right with a dividend capture strategy, he has his own spreadsheet. And he has criteria for all those trades. You know, for me, a lot of times I'll just run the numbers in terms of what I can make. And because I'm going to be flexible in my trading, I'll go ahead and buy back options that he otherwise wouldn't. And it's probably why his 2019 results were better than mine. Dude's knocking down 41% on 54 trades. I told you in my year in review, I did more trades than that, and I made half the profit. So I really need to up my game, and that's my goal for 2020. I need to start maximizing my profits for every trade I do. One of the positive things that came out of 2019 was that I traded less than 2018. So I made almost as much profit in 2019 that I did in 2018, but I did it with about half the trades. Well, for 2020, I want to make more profits on either the same amount of trades or less. And how do I do that? Man, I got to up my game. When I'm reading covered call blogs and watching the various covered call videos on YouTube, always trying to pick up that little morsel of information like I always encourage you to do with my videos. Well, back in October of last year, the covered call advisor did a covered call right with a dividend capture strategy on Citibank. Now I'm looking at his blog post on this, and I notice he has criteria for what makes a great covered call trade with a dividend capture. Now, I use this strategy all the time, but I don't have a spreadsheet. I don't have criteria. So this really excites me. He has an 11-point criteria for which he plugs in the numbers, and they have to meet certain criteria before he opens the trade. Now, I don't have that, but I want that because I want to up my game. So what do you think I did? I created a spreadsheet. That's right. If we're going to get good at this, if I'm going to get good at this, I need to make sure I have my spreadsheets. I have to keep the numbers in front of me. Man, there are so many criteria that the covered call advisor uses. I need to make sure I keep those numbers in front of me. So I created this simple spreadsheet based off of his criteria. Now, what I'm going to do here is I'm going to show you his Citigroup trade versus my 3M trade that we're going to talk about here in a minute. And I think you're going to notice something right off the bat. But before I get there, it's important that we keep the numbers in front of us. It's about understanding the numbers and what we're looking to achieve. You know, when I talk about the covered call advisor and how he breaks down all of these trades and he's generating 40% cash on cash, you know, there's a reason. There's a reason for that. He's successful. And when you read some of his trades and the numbers, right, it's very clear to me that he has a plan, he executes the plan, and before he makes a trade, he makes sure he's going to put himself in the best possible position for success. Now, a lot of the stocks that he picks, I know nothing about it, but that doesn't matter. When he puts together a trade, man, the numbers have to match up. In his mind, they have to meet certain criteria. And I'll tell you what, that really impresses upon me. I want to be that good. So getting back to his Citigroup trade, you can see that he has various criteria, and what he's looking to do is have more probability of success than failure. And for a lot of us, that's the key. You know, we want to be on the side of more probability of success versus being risky, doing it willy-nilly, not putting in the time, and then we have more probability of failure. Because what failure means here is that we buy a stock, we write a covered call, and the trade goes south. And when it goes south, we find ourselves in a spot where we don't know why we're holding the stock. We don't know why the stock has fallen. And we're in a negative position. And now it affects us mentally, and hell, it can even affect you physically because you're losing money. Right? So look, at the end of the day, we want to make sure we're doing this right. So when I look at the covered call advisor's Citigroup trade, you could see when he plugs in all the numbers and all his criteria, look at all that green. You got to have green or red, and if it's more red than green, you're not going to do the trade. And in fact, he has to meet 9 of the 11 to move forward with the trade. So on this Citigroup trade that he posts freely on his website, we can see that this guy is on mark with everything he's doing with this covered call trade. Well, when I compare that to the trade I just did, a trade that I'm very comfortable with, a trade that I do all the time with 3M, I find that I'm putting myself in more probability to lose versus win. And I'm going to show you that 3M trade right here. Now, we're going to go to the charts here, and I'm going to talk about why I did this trade. But look at this, right? This is a typical covered call trade with a dividend capture that I always talk about. I've got many videos I talk about. But look, when we run the numbers, I have more red, right? I have more red. And if I had that criteria, chances are I wouldn't have put on this trade. Or I would have put on a trade that has more probability of winning. Now, I still like this trade. And instead of doing an in-the-money strike that he does, I, of course, did the out-of-the-money strike. And that's largely why my numbers don't look as clean and green as his. So the reason I show you this is because I'm putting together this spreadsheet. I am going to use this spreadsheet religiously. I do a lot of covered calls with dividend capture. It excites me, but I want to make sure I'm doing them to where I can maximize my success. And I'll tell you, keeping the numbers in front of you, using spreadsheets help us with that. Now, what I'm going to do is this. Once I complete this spreadsheet and clean it up, I am going to offer it up over here on my free spreadsheet webpage. All you do is go there, download it for free. I don't charge you nothing. I don't sell you nothing there. Download it and use it to your advantage. And I will also tell you, go to the Covered Call Advisor blog. Check his stuff out. He posts it up freely. He's giving you all that free information. You guys will email me or you'll make comments that, you appreciate what I'm doing and just offering up my time and my experience, so on and so forth. He does the same thing. You just have to go there. You just have to check it out. What I like to do is go to Google Calendar. I'll put in Covered Call Advisor, and that reminder will have me go to his blog about every week just to see the trades that he's done. And I love looking at the trades and seeing if I would have done the same thing. So looking at my trade, this next 38-day trade is going to be a good one. If my shares are taken away, I'm going to make a max gain of well over 2,500. Now understand, I owned 3M back in the 150s, but when we write that covered call and we're factoring out all of the numbers, right? We have to use where the stock is trading now, not my cost basis of 150. It's all about right here, right now. Because if I use the cost basis of 150 and I'm writing a 185 strike, the numbers are going to look so over bloated. I need to use the cost basis of where the stock's trading now, so we get that flavor of what this trade will produce in the 30-day period. Now, in this case, it's 38 days. And as you can see, 38 days, cash on cash, if my shares are taken away and I collect the dividend plus the premium, I'm knocking down 7% in these 38 days. Now, that's 67% annualized, and that's a nice number. I only include that number because most covered call gurus on YouTube will always talk about the annualized number. But the reality is, we want to try to have successful trades where we're making 3% to 4% a month. Cash on cash, we do it again and again. Now, one of the things with this trade is the implied volatility. Now, 3M is not one of those rocket off the chart stocks, right? So the implied volatility for this trade is only 24%. Now, I like that. My Roku trades are coming in at 64 and 65%. So Wall Street does not think 3M is going to rocket off the chart. So this is why I did the out of the money strike, because I'd like to get a little stock appreciation as we get near that 30-day expiration. Right? We move higher. I hold the stock through the X date, collecting that dividend. And then as we get towards the 38-day expiration, which is February 28th, the stock can get up near my strike of 185. Now, there's a 24% chance that the stock will trade between 199 and 156. Well, of course, we divide that by 2 to get our true number. So right now, we have a 12% chance of 3M going from 178 to 199. And I don't think that's going to happen. Now let's get to that chart real quick, because I want to show you what the chart looks like and what I'm thinking right now. Okay, so I'm getting a little long in the video. I apologize. This is what I'm thinking when I write this covered call. So again, at 177X, I write the 185 strike. Now, I haven't seen 3M trade above 185 in a while. So the idea of having 3M trade above 185 near the X date, well, I don't think that's going to happen. Because as you could see, there's only 8 days from the time that I wrote the covered call to the X date. So the chances of having my shares taken away and having that dividend ripped from me, highly unlikely. That's why I put out the 185 strike, because I do think Wall Street right now likes 3M right about here. If we get any sort of market that is sideways to up, I'll tell you, I think 3M starts to move a little bit higher back to that 182, 183. Now, if we can get past the X date and I collect that dividend, and remember that dividend is $1.44, I'm then able to just ride the rest of the trade out. And if my shares are taken away, well, I get 185 for my shares, 190 for the premium, 144 for the dividend, and that's where I'm knocking down that $2,500. Well, if I played this right and I want to keep my shares, which you know I do, here's the deal. I want this to go through the X date. I keep the 144, and the stock will get towards 185. It will not finish above 185. Keep my shares, and we move on. And I'll look to write the next covered call on 3M, collecting more and more credits. Now, I know a lot of you ask the question, where do you find great covered call stocks to do dividend capture? Well, inside the upgraded CTP dashboard, I have the dividend dashboard. And what I load it with are all the stocks and ETFs and closed-end funds that are going to have an X date in the next 10 days. So buy a stock many, many days in advance. That's why the dividend dashboard is loaded with stocks for the next 10 days. I update this every week. What I love to do is open up the dashboard, and the first thing I do is I sort the dashboard by the quarterly dividend. I love to see what stocks are paying those fat dividends. And usually for me, man, I'm looking for that $1 number. Because when I buy a stock and then I write that 30-day covered call, and if I did that right, that's about 3%, maybe 4%. And then if I'm collecting a dollar dividend on top of that, man, that's like the cherry on top. That's where I feel like I'm doubling my dividend. And then what I do is this, I do my research. I go in and I start to research the stock. I plug in things like what's the actual dividend, what's the date. I want to make sure that it adheres to the golden rules of covered call writing. So I want to make sure it doesn't have an earnings report. I want to verify that earnings report. I also want to see if it has enough volume. I also want to see if it pays a dividend 2% or more. That's a golden rule for me. Then I'll go in, look at the charts from the various websites, and then finally I plug in all my numbers to come up with that profitable 3% monthly trade. Now I'm going to leave it right there for this week. Look, we do these videos so you get a little closer to it, man. Maybe you feel a little more comfortable today after watching this video, and you'll do it. You'll get your financial education, you'll get your experience, and I'll tell you what, you're going to start having success. Look, the only way we're going to get proficient at this is if we do it. I always encourage you to open up that small ball account, do your very first safe trade. And I'll tell you, you too can have the same success I'm having. Now look, if you like what we did today and you're interested in the upgraded CTB dashboard, it's right there. All you do is go to my website, click CTB dashboard, and you can see everything we're doing. I believe I have the best covered call dashboard screener on the planet. Now, I'm biased, of course, but look, we also do other things there. Not only do you have the great dashboard research tool where you can search for that next great covered call right or cash secure put right with the Where Are They Now tab. Look, man, we also do real-time trades where I break them down. I show you my trades, we talk about it, so maybe you learn something. So you get a little bit closer. Then I do my chart of the month. Look, we have so much happening over at the CTB dashboard that's coming. See, this is not a static PDF file, man. The upgraded CTB dashboard is dynamic. I have 3 or 4 ideas I'm working on in my test lab CTB dashboard, just getting it ready, trying to up your game. Look, if you head over to CTB dashboard, click upgraded CTB dashboard and see if any of that interests you. I'm going to leave it right there. If you like this video today, bang that like button. It lets me know you like what I'm doing. And what we're doing next week, man, I got a high volatility covered call trade that you'll want to see. We're knocking down over $9 of premium. Look, this is what we do. I show you my trades, we talk about them, so maybe you learn something. Until next time, may all your covered calls be profitable.